On August 5th, AgEagle releases a PR to announce a direct offering of shares and warrants of common stock at an exercise price of $3.30. Normally, when investors see an offering, they think share dilution, and then people scramble to dump their shares in a panic. But in this case, we see that trading is halted, and when it opens back up, the share price runs up to $3.40. And you may be wondering to yourself, how in the world does this happen? The answer is very simple. The offering price was $3.30, which is 10.7% higher than the market price at the time of the announcement. So that, to me, has some seriously bullish implications. And now, the question becomes, why would this big investor be willing to drop $10 million on a direct offering to buy shares at a price that's 10.7% higher than the market price was at the time? In this video, I'm going to be answering that question, and we're going to be starting right now. Hey, what's going on? It's Pat from Top Ticker Trades. If this is your first time here and you want to learn how to grow your wealth through investing and trading stocks in the market, make sure you start right now by subscribing and tapping that bell so you never miss a thing. I'll see you in the video. Let's go. What is going on, ladies and gentlemen? Welcome back to the channel. Welcome back to another video. Today we're discussing UAVS or AgEagle, and we're talking about a direct share offering where one single investor pays 10.7% more than the market value for the shares. Why? That's the question. So let's figure this out. So we know that on August 5th, in addition to the direct share offering, AgEagle also announced that they will host a corporate update on August 18th at 11 a.m. Eastern Time. This will be a webcast, and the company states that they will provide a corporate update and discuss recent operational highlights. Another interesting piece of evidence that I found is that according to a Bloomberg article, Amazon's Prime Air commercial launch date is scheduled for August the 31st. Is this all a coincidence? Really, I don't know. But what I can tell you for sure is that with the Amazon Prime Air launch date coming just less than 2 weeks after this announced webcast, expectations for the AgEagle and Amazon announcement are pretty high. But does this explain why a single investor would be willing to pay 10.7% more for UAVS shares through an offering? Well, allow me to put it into perspective for you. 10.7% of 10 million would be $1,070,000, which at the price of $3 per share would be nearly 360,000 shares. So is this investor just being nice, or what's the deal? I think I have an answer. You see, most people, when they see offerings, they kind of just scan through them rather than reading the entire thing so that they don't miss any details. So why don't we do that, and then we'll finish our talk. Okay, so according to this, it says, pursuant to the agreement, the investor is purchasing 3,355,705 shares of common stock and warrants to purchase up to 2,516,778 shares of common stock at an exercise price of $3.30 per share. The warrants for gross proceeds of approximately $10 million. The warrants are a 10-month term from the date of closing and are not exercisable until February 6th, 2021. So now that I read this finely constructed piece of literary art, I can see that this is actually the price of $3.30 is referring to what the warrants are exercisable at. it's not actually referring to the price of the shares. And we actually don't know what the price of the shares is because this doesn't tell us. So why don't we figure that out? And we can actually accomplish that by taking the $10 million and dividing that by the number of shares, which is 3,355,705. And we see then, and only then, that the actual offering price for the shares is $2.98, which is significantly different from $3.30. So, was this press release carefully crafted in a way that would not only distract investors from the dilution that was taking place, but also trick them into believing that this offering was a positive thing? That I do not know, but I do know that the effect that it had on people was negative, as it caused many to buy and drive the share price even higher after the halt. So, with this investor buying shares at $2.98 and then being able to short at $3.40, I would have to say that it was probably a very good day for him. Alright, ladies and gentlemen, thank you for watching this video. Make sure you smash that like button if you enjoyed the information or found it useful. And if you're not subscribed, make sure you subscribe, because you'll find information like this is posted nearly every single day on my channel. So, you guys have a good one. I will see you in the next video.